Listen, money doesn't sleep, and neither do the people who control it. You're here because you want to know who's really moving the needle, who's making the big bets that will define our future. Forget the noise, forget the wannabes. We're about to count down the 30 most powerful, influential, and frankly the most important investors on the planet for 2025. These aren't just people with deep pockets, they are the architects of tomorrow's economy. They see trends before they happen. They build empires from ideas, and their decisions ripple across every market, every industry, and ultimately, your wallet. This isn't just a list, it's a roadmap to where the smart money is going. These are the sharks, the titans, the visionaries who are actively shaping the global markets. From the hallowed halls of traditional finance to the bleeding edge of disruptive technology, their strategies are rewriting the rules of investing. They're not just playing the game, they are the game. Understanding their moves is crucial, whether you're an aspiring entrepreneur, a seasoned executive, or just someone who doesn't want to get left behind. I don't waste my time with mediocrity, and neither should you. So, pay close attention. Over the next few minutes, we're going to dissect the minds that are influencing the future of finance. We'll look at the legends who built their fortunes on timeless principles and the new guard who are betting it all on radical innovation. This is more than just a countdown, it's a masterclass in wealth creation, strategy, and power. Get your notepad ready, because the lessons you're about to learn are worth a fortune. Let's get to it. Who's making money, and who's getting crushed? It all starts now. Kicking off our list is a name that's synonymous with investing itself, Warren Buffett, the Oracle of Omaha. For decades, his name has been a bastion of stability and common sense in a world of financial chaos. His philosophy is simple, almost deceptively so. Buy wonderful companies at a fair price and hold them forever. It's not sexy, it doesn't involve complex algorithms or crypto fantasies, but it has created staggering, unbelievable wealth. Through Berkshire Hathaway, he commands a portfolio of iconic American companies from Coca-Cola to Apple, demonstrating a profound understanding of long-term value. His influence isn't just in his stock picks, it's in his principles. Every year, millions hang on every word of his shareholder letters, searching for pearls of wisdom on markets, management, and life. He's a living legend whose strategy of patience and discipline remains a powerful counter-narrative to the high-frequency trading and speculative frenzy of the modern era. While others chase fleeting trends, Buffett's steadfast approach continues to shape investment thinking globally, proving that true wealth isn't just made, it's carefully, painstakingly, and brilliantly cultivated over time. He's a benchmark against which all others are measured. Next up is Ray Dalio, the founder of the world's largest hedge fund, Bridgewater Associates. Dalio doesn't just invest in companies, he invests in entire economies. He's a macro thinker, a student of history and economic cycles. His approach is built on understanding the massive, sweeping forces that move markets: inflation, debt cycles, political shifts. He's famous for his principles, a set of rules for life and business that have become a manual for executives and investors around the globe. He believes in radical transparency and building an idea meritocracy, a brutal but effective way to get to the truth. Through Bridgewater, Dalio has pioneered strategies like risk parity, aiming to build portfolios that can weather any economic storm. He's not just trying to predict the future, he's trying to build a machine that's prepared for any possible future. His public commentary on global debt, the rise of China, and the changing world order makes him a crucial voice for anyone trying to navigate the complexities of the 21st century economy. When Dalio talks about the big picture, everyone, from central bankers to everyday investors, stops and listens. He operates on a different level, looking at the board, not just the pieces. In a world of value and tradition, Cathie Wood is a bolt of lightning. As the founder of ARK Invest, she has become the face of a new generation of investing, one laser-focused on one thing: disruptive innovation. She's not interested in the blue chips of yesterday, she's hunting for the next big thing. Her targets are companies in genomics, robotics, artificial intelligence, and blockchain, the technologies that are poised to fundamentally change the way we live and work. Her conviction is absolute, and her willingness to make massive, concentrated bets on her vision has attracted a cult-like following. Of course, this high-stakes strategy comes with extreme volatility. Wood's funds can soar to incredible heights and then plummet just as fast, making her a polarizing figure on Wall Street. The old guard calls it reckless speculation, Her followers call it visionary. But you can't deny her impact. She has forced the entire investment community to pay attention to emerging technologies and has democratized access to high-growth venture capital-style investing for the average person. Whether you think she's a genius or a gambler, Cathie Wood is undeniably a force shaping the future of finance. Peter Thiel is not your typical investor. He's a philosopher king of Silicon Valley, a master of contrarian thinking. As a co-founder of PayPal and the first outside investor in Facebook, he has a track record of identifying transformative technology companies before anyone else. His investment thesis, famously outlined in his book 0 to 1, is about finding and funding monopolies, companies so unique and dominant that they create entirely new markets. He's not interested in competition. He's interested in complete and total domination. Thiel's influence extends far beyond his checkbook. He's a powerful and often controversial intellectual figure, backing ventures in artificial intelligence, biotechnology, and even space exploration through his venture firm, Founders Fund. He challenges the status quo, asking the uncomfortable questions that others are too afraid to voice. He doesn't follow the herd. He actively bets against it. This contrarian, often secretive approach makes him one of the most intriguing and closely watched figures in the tech world. He's not just funding companies, he's funding his vision of the future. George Soros is a legend, a phantom of the financial markets. His name is forever etched in history for breaking the Bank of England in 1992, a single, audacious trade against the British pound that netted him over $1 billion. This wasn't just a lucky bet, it was the result of his theory of reflexivity, a complex idea that market participants don't just react to reality, they actively shape it. He understands that markets are driven by human psychology, fear, greed, and flawed perceptions, and he has masterfully exploited those flaws for decades. Through his quantum fund, Soros executed some of the most successful macro trades in history, betting on massive shifts in currencies, commodities, and global politics. But his story doesn't end with profits. In his later years, he has become one of the world's most significant philanthropists, channeling billions through his open society foundations to promote democracy, human rights, and liberal causes. He's a man who has both profited from market instability and used that wealth to try and shape a more stable, open world, a fascinating and powerful paradox. When Bill Ackman takes a stake in a company, the board of directors knows they're in for a fight. As the head of Pershing Square Capital Management, Ackman is the quintessential activist investor. He doesn't just buy stocks, he buys a platform. He takes large, concentrated positions in public companies and then publicly agitates for change, demanding new management, spin-offs, or a complete strategic overhaul. He believes many great companies are simply mismanaged, and he's the man to fix them, whether they like it or not. His career has been a roller coaster of spectacular wins, like his bet on Canadian Pacific Railway, and very public, very painful losses, like his infamous short on Herbalife. Ackman is a showman. He presents his investment theses in multi-hour, deeply researched presentations that are part financial analysis, part public theater. He puts his money and his reputation on the line in a way few others dare. This high-profile, often confrontational style makes him one of the most watched and feared investors in the corporate world. When Ackman starts buying your stock, change is coming. In the world of high-speed, high-stakes trading, Ken Griffin is king. As the founder of Citadel, he presides over a financial empire that is a cornerstone of the modern market. Citadel is, well, two things: a massively successful hedge fund and a colossal market-making operation. The hedge fund uses sophisticated quantitative strategies to generate consistent returns, while the market-making arm processes a staggering percentage of all United States stock trades. If you've bought or sold a stock, there's a good chance Citadel was on the other side of that trade, making a tiny fraction of a penny. Griffin is a pioneer of quantitative investing, using immense computing power and complex algorithms to find and exploit market inefficiencies faster than any human could. His firm is a magnet for the brightest minds in mathematics, physics, and computer science. Citadel's sheer scale and technological prowess give it an incredible edge and make it a critical piece of plumbing in the global financial system. Griffin himself is a private, intensely competitive figure who has built a machine that is, honestly, synonymous with speed, power, and the relentless pursuit of profit in the digital age. Steve Cohen is a name that commands both respect and a certain degree of awe on Wall Street. He built his legend at SAC Capital, a hedge fund renowned for its phenomenal, almost unbelievable short-term trading returns. His ability to read the tape and anticipate market sentiment was second to none. He was the master of the edge, gathering information from a vast network of sources to make incredibly timely and profitable trades. His success made him a billionaire and a legend among traders. After SAC faced insider trading charges, Cohen was forced to return outside capital but was never personally charged. He then staged one of the most remarkable comebacks in financial history, launching Point72 Asset Management and returning to the game stronger than ever. Today, Point72 is a powerhouse, employing thousands and managing billions. Beyond finance, Cohen is a voracious art collector, owning one of the most valuable private collections in the world and the owner of the New York Mets. He's a figure who, honestly, embodies the aggressive, high-stakes, and ultimately resilient nature of Wall Street. Jim Simons is perhaps the most mysterious and successful investor on this list. He's not an economist or a financial analyst, he's a brilliant code-breaking mathematician. Before starting the hedge fund Renaissance Technologies, he was a celebrated academic and worked for the NSA as a codebreaker. He took that same mindset, finding hidden patterns in complex systems, and applied it to the financial markets. The result was the Medallion Fund, a private fund for employees that has generated the most astonishing returns in investment history, averaging over 66% annually before fees for decades. The secret to this success is a complete black box. Simons and his team of PhDs in math, physics, and statistics built complex quantitative models that trade automatically, exploiting tiny fleeting patterns in market data that are invisible to human eyes. They don't care about a company's management or its product, they only care about the data. Simons proved that the market, for all its human drama, could be treated as a massive code to be cracked. He is the undisputed father of quantitative investing, and his success remains the holy grail that every quant fund strives for. If you want to talk about sheer investing talent, you have to talk about Stanley Druckenmiller. For 30 years he ran his fund, Duquesne Capital, and generated an average annual return of 30% without a single down year. That record is simply staggering. He was the lead portfolio manager for George Soros at the Quantum Fund and was the strategic mind behind the famous bet against the British pound. His philosophy is, go for the jugular. When he sees an opportunity, he doesn't just dip his toe in, he makes a massive, highly concentrated bet. Druckenmiller is a top-down macro investor. He looks at interest rates, currency movements, and economic trends to form a big-picture thesis, and then expresses that view with conviction. He's famous for his ability to pivot quickly, admitting when he's wrong and changing his position without ego. Even after closing his fund to outside investors, he continues to manage his own vast fortune, and his rare public comments on the market are treated as gospel by the investment community. He is, by any measure, one of the greatest traders to ever play the game. Carl Icahn is the original corporate raider, a name that has struck fear into the hearts of CEOs for nearly half a century. He is the ultimate, unapologetic activist. Icahn's strategy is to buy a significant stake in a company he deems undervalued or poorly run, and then use that position to force major changes. He'll demand board seats, push for asset sales, or advocate for a full-blown takeover. He calls it shareholder activism. His detractors call it a shakedown. Whatever you call it, it has made him incredibly wealthy. From TWA and Texaco in the 80s to modern giants like Apple and Netflix, Icahn is tangled with some of the biggest corporations in America. He sees himself as a crusader for the common shareholder, fighting against entrenched, overpaid C-suite executives. He is relentless, combative, and has an uncanny ability to unlock hidden value that management teams have overlooked. His legacy is one of confrontation and change, proving that sometimes the most profitable position is to be the loudest person in the room. He doesn't ask for change, he demands it. David Tepper has a simple motto: when it's time to make money, you have to be all in. As the founder of Appaloosa Management, he has built a legendary career on one thing: courage. He specializes in distressed debt, which means he runs toward the fire when everyone else is running away. He buys the bonds and stocks of companies on the brink of bankruptcy, betting that they will recover. It's the riskiest corner of the market, But Tepper's genius is in seeing value where others only see ruin. His most famous trade came during the 2009 financial crisis. When the entire financial system seemed to be collapsing, Tepper made a massive bet on beaten-down bank stocks like Bank of America and Citigroup, correctly predicting the government would not let them fail. The move netted his fund billions and cemented his status as a Wall Street legend. He's known for his exhaustive research and his nerves of steel. Now also the owner of the Carolina Panthers, Tepper embodies the high-risk, high-reward mentality that defines the top tier of hedge fund managers. Joel Greenblatt is really an investor's investor, a professor, and an author who's dedicated his whole career to, well, demystifying the art of value investing. He's definitely not about gut feelings or, making complex macro bets. He's all about simple, repeatable formulas. Through his hedge fund, Gotham Capital, he achieved some truly astounding returns by focusing on special situations like spin-offs and mergers. But honestly, he's most famous for the concept he introduced in his bestseller, The Little Book That Beats the Market. He called it the magic formula. The idea is to find good companies at bargain prices by ranking stocks on just two metrics: earnings yield and return on capital. It's a brilliantly simple, quantitative approach to value investing that just about anyone can understand and apply. Greenblatt has spent his career teaching these principles at Columbia Business School and making them accessible to, well, pretty much the public. He's a true believer in the power of a disciplined, logical process to outperform the market's emotional whims over the long term. Paul Tudor Jones is a titan of macro trading, honestly, a man who built his fortune by anticipating and betting on those major market inflection points. His most legendary call came way back in 1987, when he predicted the Black Monday stock market crash. He reportedly tripled his money while the rest of the world was in a panic. He did it by studying historical market patterns and recognizing that the setup was, well, dangerously similar to the crash of 1929. That trade alone made him a legend. As the founder of Tudor Investment Corporation, he has remained a dominant force in macro trading for decades, betting on everything from interest rates and currencies to commodities. He's known for his incredible risk management and his flexibility, willing to change his mind in an instant if the market tells him he's wrong. Beyond trading, Jones is actually a dedicated philanthropist, founding the Robin Hood Foundation, which has become one of the most effective poverty-fighting organizations in New York City. He's a master of the markets who also uses his wealth to try and fix real-world problems. Michael Burry is the man who saw the storm coming when, honestly, everyone else was looking at blue skies. Immortalized in the book and movie The Big Short, Burry was one of the very few investors who understood the deep, systemic rot in the U.S. housing market in the mid-2000s. While Wall Street was packaging and selling toxic subprime mortgages, Burry, a former neurologist, painstakingly sifted through thousands of pages of bond prospectuses and realized it was all just a house of cards. He then convinced some pretty skeptical banks to create a new financial instrument, the credit default swap, to allow him to bet against the housing market. It was a lonely, incredibly stressful, and ultimately spectacularly profitable trade that made him and his investors a fortune when the system collapsed. Today, through his firm Scion Asset Management, he continues to be a maverick, making concentrated, often cryptic bets against market darlings like Tesla or popular funds. He really is the ultimate contrarian, a deep researcher who trusts his own analysis above all else, no matter how unpopular his conclusions are. Li Lu's story is incredible. He began as a student leader at the Tiananmen Square protests, escaped China, and eventually found his way to Columbia University, where he discovered the teachings of Warren Buffett and Benjamin Graham. He is really the embodiment of the American dream and the power of value investing. Today, he is one of the most respected investors in the world, and is considered by many to be the intellectual heir to the Berkshire Hathaway philosophy, with a deep, unparalleled expertise in the Chinese market. Li Lu runs his own fund, Himalaya Capital, and is one of the very few outside managers that Charlie Munger, Buffett's longtime partner, has entrusted with his own family's money. Li Lu's strategy is pure concentrated value investing. Find a handful of truly outstanding companies in China, a market he understands intimately, and invest in them for the very long term. His deep connections and on-the-ground knowledge give him a massive advantage. He serves as a critical bridge for Western investors trying to understand the opportunities and complexities of the world's second-largest economy. No one in the world makes bigger, bolder, or more audacious bets on the future of technology than Masayoshi Son. As the founder of SoftBank and the architect of its colossal $100 billion vision fund, Masa has poured unprecedented amounts of capital into late-stage tech startups around the globe. His goal is not just to fund companies but to orchestrate a global ecosystem of businesses that will lead the coming artificial intelligence revolution. He actually has a 300-year plan for SoftBank, a timeline that makes other investors look hopelessly short-sighted. His strategy is high risk and has produced both incredible successes, like his early investment in Alibaba, and spectacular flameouts, like WeWork. He's a kingmaker, and a check from the Vision Fund can instantly transform a startup into a global powerhouse, often by just overwhelming the competition with cash. Sun is driven by an unwavering belief in the singularity and the power of technology to solve humanity's biggest problems. He's not just an investor, he's a force of nature, single-handedly reshaping the landscape of venture capital with the sheer size of his ambition and his wallet. For anyone trying to understand the digital world, Mary Meeker's annual Internet Trends Report is required reading. For over 2 decades, first as a star analyst at Morgan Stanley and now as a venture capitalist, Meeker has been the definitive voice on the state and future of the internet. Her yearly presentations, packed with hundreds of data-rich slides, are basically the industry's Bible, meticulously detailing everything from e-commerce growth and mobile adoption to emerging trends in China and India. As a venture capitalist at firms like Kleiner Perkins and now her own firm, Bond, she has used that incredible insight to make early and successful investments in some of the defining companies of the digital age, including Google, Amazon, and Facebook. She doesn't just analyze trends, she funds them. Her ability to synthesize vast amounts of data into a clear, compelling narrative about where the world is heading makes her one of the most influential figures in Silicon Valley. If Mary Meeker says something is the next big thing, the entire tech industry pays attention. While Michael Burry was one of the first to see the housing crisis, John Paulson was the one who, honestly, made the most money from it. In what is often called the greatest trade ever, Paulson's firm, Paulson & Company, made an astronomical $20 billion between 2007 and 2009 by betting against the subprime mortgage market. It was a trade of just stunning scale and conviction that turned a mid-sized hedge fund into a global behemoth and made Paulson a billionaire almost overnight. He accomplished this by using credit default swaps to short the shoddiest mortgage-backed securities he could find. Like Burry, he saw the systemic risk that the big banks were ignoring, but he executed the trade on a much larger and, honestly, more aggressive scale. While his fund has had a more challenging track record in the years since that monumental trade, his legacy is secure. He will forever be known as the man who executed the single most profitable financial bet in history, a masterclass in seeing a crisis on the horizon and positioning oneself to profit from the fallout. Chase Coleman is a tiger cub, one of the many successful investors who learned their craft under the legendary Julian Robertson at Tiger Management. After starting his own firm, Tiger Global Management, Coleman has become one of the most powerful and secretive investors of his generation. He operates a hybrid model, a public hedge fund that invests in the world's best tech companies, and a massive private equity arm that has become one of the most aggressive and prolific venture capitalists in the world. Tiger Global's strategy is to identify leading internet companies in the United States, China, and India, and invest in them across their entire life cycle, from early-stage startup to publicly traded giant. They're known for moving incredibly fast, making decisions in days rather than months, and writing huge checks to back winners like Facebook, LinkedIn, and Spotify. Coleman rarely speaks publicly, letting his incredible track record do the talking. He has built a quiet empire that sits at the intersection of public and private tech investing, making him, honestly, a kingmaker in Silicon Valley and beyond. Daniel Loeb, the founder of Third Point, is an activist investor who, honestly, wields a pen like a sword. He is famous for his scathing, brilliantly written letters to the CEOs and boards of companies he invests in. These letters are works of art, meticulously researched and filled with sharp-witted takedowns of management, which he then makes public to rally other shareholders to his cause. He uses public pressure and his formidable intellect to force change and unlock value. Loeb is a versatile investor, engaging not just in activism but also in credit and risk arbitrage, betting on everything from sovereign debt in Greece to corporate mergers. He's not afraid to take on anyone, from the leadership at Sony in Japan to the board of Sotheby's. His campaigns are often successful, leading to shakeups in the C-suite and significant returns for his fund. Loeb has proven that in the world of corporate battles, a powerful argument and a sharp tongue can be just as effective as a controlling stake. Seth Klarman is a legend in the world of value investing, often called the Oracle of Boston. As the head of the highly secretive Baupost Group, he's generated exceptional returns for decades with a relentless focus on one thing: margin of safety. This is the core principle of his mentor, Benjamin Graham, which means only buying assets for significantly less than their intrinsic value. Klarman is the ultimate risk-averse investor. His first thought isn't how much he can make, but how much he can lose. His book, Margin of Safety, is a cult classic in the investment world, a collector's item that sells for thousands of dollars because it's considered the definitive text on disciplined, value-oriented investing. He is patient, willing to hold large amounts of cash for years while waiting for the perfect, low-risk opportunity to appear, often in complex or out-of-favor securities. In an industry obsessed with chasing returns, Klarman's unwavering discipline and focus on capital preservation make him a revered, almost mythical figure. Howard Marks is, well, the philosopher king of credit investing. As the co-founder of Oaktree Capital Management, he is the undisputed master of distressed debt and a brilliant thinker on market cycles. He doesn't believe you can predict the future, but he argues passionately that you can and must have a sense of where you are in a cycle, whether markets are euphoric and overpriced or fearful and cheap. Acting on that knowledge is the key to long-term success. His greatest contribution to the investment world might be his famous memos, which he sends to clients. These memos are must-reads for the entire financial community, including Warren Buffett, who has said they are the first thing he opens. In them, Mark shares his deep, nuanced thoughts on risk, investor psychology, and the nature of markets. He's a brilliant teacher who has made complex ideas about credit and cycles accessible, helping investors understand the importance of second-level thinking and avoiding the psychological traps that lead to ruin. Mohnish Pabrai has built an incredible track record by being, in his own words, a shameless cloner. He believes that investing is a field where you can peek at your neighbor's test and get an A+. His entire philosophy is based on rigorously studying and replicating the strategies of the world's greatest investors, particularly Warren Buffett and Charlie Munger. He runs a highly concentrated portfolio, often holding just a handful of stocks, a strategy he calls Dondo, which focuses on heads I win, tails I don't lose much. He looks for simple businesses with a durable competitive advantage, run by honest managers that are trading at a significant discount. It's the classic Buffett-Munger approach, but Pabrai applies it with intense discipline and focus. He is also a notable philanthropist, co-founding the Dakshana Foundation, which provides world-class coaching for impoverished but brilliant students in India. He has proven that you don't need to reinvent the wheel to achieve phenomenal success. You just need to find the right wheel and copy it perfectly. In the context of India's booming economy, no name looms larger than the late Rakesh Jhunjhunwala. Known as India's Warren Buffett or the Big Bull, he was an investor and trader who honestly became a symbol of the country's economic rise. Starting with just a tiny amount of capital, he built a multi-billion-dollar fortune by making bold, long-term bets on the future of India. His endorsement could, turn a little-known stock into a market darling overnight. Jhunjhunwala was a master stock picker with an unshakable belief in India's growth story. He invested in a wide range of sectors, from finance and retail to tech and infrastructure, with major wins in companies like Titan and Lupin. He was a charismatic, larger-than-life figure whose pronouncements on the market were followed religiously by millions of Indian investors. Though he passed away in 2022, his legacy endures through his portfolio and his philosophy, which continues to inspire a new generation of investors to bet on India. While many on this list run exclusive hedge funds, Abigail Johnson presides over one of the world's largest and most influential investment firms for everyday people, Fidelity Investments. As the CEO and chairwoman, she is the third generation of her family to lead the company, which manages trillions of dollars in assets for millions of individual investors through mutual funds, 401ks, and brokerage accounts. Her influence is, honestly, immense, shaping the retirement security of a huge portion of the population. Under her leadership, Fidelity has navigated the shift from traditional mutual funds to low-cost index funds and ETFs. More importantly, she has pushed the conservative giant to embrace innovation, making early and significant moves into fintech and digital assets like cryptocurrency. She is one of the most powerful women in finance, a quiet but determined leader who is responsible for stewarding the savings of Main Street while simultaneously positioning her firm for the future of money. While Benjamin Graham is the father of value investing, Thomas Rowe Price Jr. is the father of its equally powerful counterpart, growth investing. He founded the firm T. Rowe Price in 1937 with a radical idea for the time. Instead of buying cheap cigar butt stocks, he believed investors should pay a fair price for excellent companies with durable long-term growth prospects. He looked for businesses with superior technology, skilled management, and products that were in high demand. This philosophy led him to invest early in groundbreaking companies like IBM and Xerox. He wasn't interested in short-term market fluctuations. He was focused on identifying and, holding the great growth companies of the future. This disciplined approach became the foundation of one of the world's largest investment management firms. Price's legacy is profound. He created a whole new school of investment thought that has powered the portfolios of millions and has been the driving force behind investing in the world's most innovative and successful companies. Ideas are easy. Execution is everything. That's the mantra of John Doerr, arguably the most influential venture capitalist of his generation. As the chairman of Kleiner Perkins, he has been the driving force behind some of the most iconic companies in Silicon Valley history. He didn't just provide money, he provided mentorship, strategy, and a relentless focus on execution. His early investments in companies like Google, Amazon, and Intuit are the stuff of legend. Doerr is famous for introducing the Objectives and Key Results (OKR) management system to Google, a goal-setting framework that has since been adopted by thousands of companies worldwide. He has an uncanny ability to spot not just a great idea, but a team that can turn that idea into a world-changing business. In recent years, he has turned his focus and fortune toward climate change, authoring the book Speed and Scale and Funding Startups that are tackling the climate crisis. Yuri Milner is a physicist-turned-investor who thinks on a global and even cosmic scale. He made his first fortune as an early and prescient investor in Chinese tech giants like Alibaba and JD.com. Then, through his firm DST Global, he made massive, late-stage investments in US tech titans like Facebook, Twitter, and Airbnb long before they went public, pioneering a model of providing huge amounts of capital to proven winners. He doesn't seek board seats or control. He just wants a piece of the best internet companies in the world, wherever they are. His ambition doesn't stop at Earth. Milner is also the founder of Breakthrough Initiatives, a set of science programs aimed at answering the biggest questions in the universe, including the search for extraterrestrial life. He has personally funded projects to listen for alien signals and to design spacecraft capable of interstellar travel. Milner is a unique figure who uses the vast profits from betting on the digital world to fund the exploration of the physical universe. He is a truly global investor with an out-of-this-world vision. Topping our list for 2025 is one of the most dynamic, outspoken, and controversial figures in modern finance, Chamath Palihapitiya. An early executive at Facebook, he left to start his own firm, Social Capital, with a mission to advance humanity by solving the world's hardest problems. He gained massive prominence as the SPAC king, using special-purpose acquisition companies to bring innovative companies like Virgin Galactic and SoFi to the public markets, challenging the traditional IPO process. Chamath is more than an investor. He's a media personality and a cultural force. Through his popular All In podcast and his prolific presence on social media, he offers unfiltered, often provocative, takes on everything from tech and finance to politics and society. He positions himself as a champion of the retail investor, fighting against the Wall Street establishment. While the SPAC market has been volatile, his influence in shaping financial conversations, popularizing new investment vehicles, and backing ambitious moonshot companies is undeniable. He represents the new face of finance, loud, disruptive, and relentlessly focused on the future. And there you have it. 30 names, 30 different strategies, but one common thread: immense world-shaping influence. These aren't just people moving money around, they are the architects of our economic reality. The decisions they make in their boardrooms and on their trading desks determine which technologies get funded, which companies thrive, which industries are disrupted, and ultimately, the direction in which our society moves. From Warren Buffett's timeless wisdom to Chamath Palihapitiya's disruptive zeal, their collective actions create the currents that we all have to navigate. They are playing chess while most of the world is playing checkers. Their impact goes far beyond a stock ticker. They are funding the cures for diseases, the transition to clean energy, the exploration of space, and the very fabric of our digital lives. They are also at the center of the biggest debates of our time: wealth inequality, corporate governance, and the role of capital in society. Love them or hate them, you simply cannot ignore them. Understanding their philosophies is not just an academic exercise, it's a critical tool for anyone who wants to understand the forces shaping the 21st century. These investors don't just predict the future, they are actively building it, $1 billion bet at a time. Now, the conversation turns to you. This list is a snapshot in time, and the world of finance moves at lightning speed. Who did we miss? Who do you think will have the biggest impact in the coming years? Is there a rising star we should have on our radar? Drop your thoughts in the comments below. I read them all, because in the world of money, the next great idea can come from anywhere. Don't forget to subscribe, because if you're not getting smarter, you're getting poorer. Until next time.